two huge events today. CPI data came in a little softer than expected. The stock market certainly liked that. Bond market, of course, yields fell sharply, but then kind of turned around a little bit. Now, looking at what some of the mainstream media reported, they were saying there was no growth month over month in inflation. Absolutely not true whatsoever. I don't even know where they came up with this. I've got the data to actually show you, yeah, we had month over month growth, but it's pretty solid growth. The year over year is declining rapidly. And I've got a chart to show you that there's kind of a steep slope going on there. This is something I've somewhat expected because we're seeing the economy, the rate of growth, something I've been repeating over and over again, the rate of growth is declining, which will affect the stock market. Second big news event today, of course, the Federal Reserve had their meeting. They're leaving interest rates where they are. Not exactly thrilled to death with the inflation numbers, but inflation's going to get there if they just maintain exactly where they are. They're still projecting at least one cut this year. Remember, we started this year with expectations of 6 cuts. They're whittling down to, yeah, we might be able to pull off one. Our Federal Reserve meetings, of course, November 5th is Super Tuesday, or not Super Tuesday, Presidential Election Tuesday. Wednesday and Thursday of that is a 2-day meeting for the Federal Reserve. Maybe we see something there, or at least verbiage changing. There's another meeting in December. Maybe that's when we get the cut. Nonetheless, I wanted to break down the charts, show you what happened with the markets, what data points I'm looking at, breaking down the economy and how this will affect the stock market. Let's jump in. We'll look at TLT stock and TMF stock. Now, I don't talk about TMF stock too terribly much. The reason why is TLT and TMF are basically the same. Most people trade TLT stock. I had someone send me an email asking a question. Why not? They're essentially the same. Minor differences, look at the big picture. The big picture is you might be able to buy twice as many TMF stocks simply because of price. Let's jump in. First, the breakdown. The first column you see here, this is a spreadsheet I use Keynote in Apple. This is a spreadsheet. The first column is core CPI data. This is what we get month after month after month. We take this and we ask the question, month over month, what was the change? Looking at the very bottom two, 317,978 to 318,628. If you move over one column, this is month over month change, 0.205%. That's pretty decent, except it's still not quite there. Still, the Federal Reserve might be able to look at that and say, okay, we're getting there. Take the 205, multiply that by 12 because of 12 months. What do you get? You get 24, but that's without compounding. Now, with compounding, maybe you add in another 2.5 points. So you're looking at 2.75 to 3% year over year growth rate given this month over month. Now, annual change, the third column over the 3.419%, we're seeing some pretty decent dropping in the annual growth rate, and I do have charts. Now, I did see a few mainstream media say month over month, everything was flat. No truth to that whatsoever. First off, month over month, there was a 0.205% increase. What do you mean the month over month change was flat? Don't understand that at all. Year over year growth rate, of course, falling from 3.61 down to 3.4, call it 2. That's a 220 basis point drop if you look at it from that perspective. That's decent. Let's look at some charts. Here's a look at the core month over month inflation change. We're getting closer and closer. Should we see continued moves lower, this will give the Federal Reserve what they're looking for. I expect, yes, we will get there. I do not expect the Federal Reserve to make any kind of shifts before the presidential election, November 5th, Tuesday. They meet Wednesday and Thursday. November 7th, we might get some kind of information. This is core annual rate of growth, and as you can see, the past 2 months actually starting to drop. The trend continues to slide a little more and more and more to the downside. If month over month changes start to drop significantly below the zero point 0.2 level. This will really accelerate the Fed's confidence. Should we start seeing 0.15, that's a number that the Federal Reserve will sit there and say, okay, we no longer need to be restrictive, and price pressures are below our 2% target rate, and because of that, they can go ahead and start reducing. But would they necessarily need policy accommodation? As it turns out, employment is still very strong. Not quite where it was. I think the absolute low was like 3.4%. We're at 3.9%, getting closer to 4%. If we see unemployment shifting above 4%, like to 4.25, 4.5, somewhere in there, that's pretty modest. We used to think 5% was full employment. So if we get to 4.25% in unemployment from the 3.9 we're at right now, that would be a big shift positively for the Federal Reserve. Let's take a look at this chart. What I'm going to do is, I don't have the ability to take the green line and slide it over, so I'm going to give you a second. The green line itself, the red line is core CPI. The green line is personal expenditures. Here is the same chart. I took the green and I slid it over a little bit. Why did I do that? There's a delay or lag in inflation, and it's a few months. That first chart is what I see the data points coming in month after month right now. If I slid that green line over, you can see that the lag effectively, and that there is a strong correlation between personal expenditures and prices. All right. Looking at personal expenditures, we're actually below median. Here is the same chart, personal expenditures with personal incomes. These are the two charts that I look at religiously. This is where I start everything. Blue is personal incomes. Income drives expenditures. Expenditures drive revenues for companies. They also drive price pressures and employment, lagging. Given that, everything is below median. All right, we're getting into an area where growth rates are slowing to more moderate levels. And from that, what we're going to see is probably the Federal Reserve racing at some point. That because growth is not accelerating too much, that they're going to have room to drop interest rates. We're at 3.9% in unemployment rate. This economy can't push any more quickly because there's just basically no one left to hire because we're at full employment. Given that, I do see the Federal Reserve going to get themselves in a situation where they have to hurry up and lower some interest rates for a period, not drop them entirely, but lower them quickly at first, then wait and see. Here is market reaction. This is actually SPY stock, which of course is the S&P 500. This is Spider Select Sector ETF against the S&P 500, aka SPX. And the 6:30, 08:30 New York time, I'm in Mountain Time here in New Mexico. Big pop higher, as you can see, in equity markets as when the CPI data came in, and kind of moved upward a little bit and then kind of sold off a little bit towards the end. The reason why is here is TLT stock. Now, if you've been following me for any period of time, I put a position on a little while back, and I'll show you the bigger chart on TLT stock. My take is that the Federal Reserve is certainly done raising interest rates. I gave room there, wondering if the Federal Reserve would have to raise interest rates. At the beginning of the year, everybody's saying, oh, no, we're going to get 6 cuts. We're going to get 6 cuts. I'm like, I don't know what planet you're on, but the data I'm looking at says we absolutely remain higher for longer, maybe even have to raise a quarter to a half a point if things continue at the beginning of the year in the direction they have been moving. But we're seeing the results we're looking for. This move lower in TLT stock might rock the markets tomorrow once individuals start, or savvy investors, bond traders especially, probably the savviest on planet Earth, once they start really combing through the data to show that no, the month over month, we will get there, but it's probably going to remain a little bit higher for longer. Therefore, yield doesn't need to drop quickly. The knee-jerk reaction was probably just a little over robust. We'll see how that plays out. Here's a weekly chart on TLT stock. The latest dip, I think April, May is when I started buying into, all the way back in late 2023, before January 2024. I kept saying, no, I'm not buying TLT stock. I think we're going to be moving lower. And I waited until the data lined up with my belief system and my analysis. So a couple weeks back, I did start buying into TLT stock, bought it at the very dip there, the 87.50, and going to be pushing forward from there. All right. I expect we clear 100, probably start seeing 104, 106, all the way up maybe to 112, maybe 115, but that's going to take time. This is a long move, slow, progressive. I do not see the Federal Reserve immediately pushing interest rates too fast downward, that we're probably still in an area where the Fed is going to have to maintain some vigilance because they don't want to reignite inflation. But we're data dependent, and we're going to continue to watch this data and see how things play forward. I think the stock market is a little high, played out a little bit. There are a few stocks that really are pushing the stock market overall, and it's all driven by AI stocks, more so than the robustness of this economy. We're not seeing employment gains like we've seen before. So where are the gains in or increases in revenue for companies? Because we're now at a level that's below median. One final chart. This is TLT stock versus TMF stock. They go hand in hand. So someone asked me, the nuances, this, that, and the other thing. My take is, look at the bigger picture. Sure, TMF, TLT, I don't actually know the differences on which one will take out more money for whatever reason, for fees and all that. Here's what I know. We saw about a 1.5% move in upward in TLT stock. That'll wipe out anything that the managers are taking. Look at the big picture. I expect both of these to move in tandem back upward. TMF may have a bit more room to go upward, which could potentially give you a better percentage return because TMF is well below TLT stock, and that over the longer term, they meet up. So that's kind of my take on TLT versus TMF. I pretty much take TLT because it gets much more volume. And I tend to augment my trading with options, and I need that volume. I need to be able to get in and out. I want to be filled as rapidly as I can. So that's my preference, is really driven by options trading. Given that, I don't think you go terribly wrong going in either direction, that they operate pretty much exactly the same. On a percentage basis, I believe TMF stock might outperform TLT stock based on the fact that it's much lower at this point. So I'll keep this in mind, that someone was interested in the differentiation between the two. He's a follower, and I'll go ahead and he sent me an email this morning, of course, and I'll go ahead and kind of include this on my TLT stock. I know a lot of people follow me for this content. Make sure, if you're just finding me, hit that like and follow button. It helps out the channel, of course. Thanks so much. Really appreciate everybody following along. Plenty of economic data coming up in the next couple of weeks. We'll see you in the next video.